In this video, we're going to be going over support and resistance, trends, and consolidation, right? When it comes to these things, they're basically some of the main concepts that you need to know when it comes to trading. And if you can lock these concepts down, trading becomes a lot easier, right? And so when it comes to trading, the market moves in three different directions or ways, right? So you have uptrend, downtrend, and consolidation. All right, so these are the three ways that the market will move, each of them being a direction which is moving. So an uptrend is when the market is moving in a upward direction, right? So it looks something like this. Now, when it comes to uptrend, the uptrend doesn't mean it's just going to be going up and only up. The market never moves that way, right? The market is going to have movements up. There's something called pullbacks, another push up, pullbacks, another push up. And these movements are usually labeled or considered as a low, then a high, right? I'm just abbreviating. You'll have a low, then a high, right? Now, next, you'll have something called a higher low. And the reason why this is called a higher low is because it's higher than the previous low. And to be honest, in the future, which you're going to see in other videos, these are going to be the areas in which, if we are already in an uptrend, we're going to be looking to try to get entries around this area. There'll be more details into it, but you'll see in the future, right? So you have your low, your high, your higher low, and then your higher high, right? The reason why it's considered a higher high is because it's higher than the previous high. Then you may have another higher low due to it being higher than the previous low, and then a higher high, right? So that's basically what an uptrend will look like after I go over all of these, every style of movement, every type of movement. I'll show you how it looks on the chart, right? But that's an uptrend, right? Downtrend, similar. So now it's going in the opposite direction. Same concept though, where for the most part it's going lower, but then they'll have these small pullbacks, right? So now you start off with a high, then you get a low. Then you may have something called a lower high, because it's a high that's lower than the previous, and then you get a lower low because it's lower than the previous low. Lower high, lower low. All right, so this would be an example of a downtrend. I'm gonna go over consolidation last, but I want to show you examples of higher highs, higher lows, and stuff like that. So if I were to start here at this bottom, right, we have our low, then we have an impulse up, right, which comes up to this point. It then pulls back and gives us a higher low, right, because it's higher than the previous low. It then pushes up higher, giving us a higher high and a higher low. Another push up, higher high, pull back, higher low. Another push up, higher high, another pull back, higher low. Another push up, higher high. And as you can see, is it the cleanest every time? Is it going to be the perfect movement? No, but you can see you're getting big impulse high, small pullback. Big impulse high, small pullback. Big impulse high, small pullback. And so this is what an uptrend will look like. When we are in uptrends, we only look for buys. All right, we only look for buys. Now, in a downtrend, it'll look like this. You have your high, you have your impulse down, creating your low. You get a pullback, creating a lower high, because this was your original high. Then you get a lower low. Lower high, lower low, lower high, lower low, right? It's the same thing. You're starting off at a high, and it's constantly getting lower and lower and lower, right? Now, are there pullbacks? Yes, but you're still creating lower lows without creating a higher high, right? And so that's what a downtrend will look like. Now, when it comes to trends, if you go to lower time frames, the trends can be different, right? So the higher the time frame, the stronger the trend may be. The lower the time frame, the weaker the trend can be. But there can be trends within trends, right? So like if I were to go to a lower time frame, just to give you one example really fast, I'm gonna put a box right where this pullback is, right? Where it's creating this higher low. If I go to a lower time frame like the 5 minute, and I go to that area. Just 1 second. And I go to this area. You will see it's creating lower lows or moving in the downward direction where it's a lot smaller, but you see it's creating lower lows, right? So on a lower time frame, we're seeing this as a downtrend, but on a higher time frame, we're just seeing this as a pullback to lead up higher, right? Now, when it comes to consolidation, this is where I can go over support and resistance as well. So I'm gonna break down support and resistance, and I'm gonna break down how support and resistance also can lead to consolidation. So when it comes to support and resistance, I want you to think of it as a building. All right, I want you to think as a building. And if you're in a building, let's say you're on the first floor, your support I want you to think about as your floor, right? And your resistance I want you to think about as your ceiling. So if you were to throw a ball at your floor, it would typically bounce back up. And if you were to throw a ball at your ceiling, it would potentially come back down, right? And so that's how the market moves off of support and resistance. The market can be stuck in a channel where it's not breaking through an area, right? It's not breaking through, right? So when it's stuck in an area where it's not really trending at all, where it's not in an uptrend, it's not in a downtrend, that is called consolidation. And typically, we don't trade in consolidation, right? Now, like I said before, I want you to think of this as a building. All right, think of this as a building. So now, if you were to go up to the next floor, let's say you go up to the second level, the second floor, what was once above you is now below you. So what do I mean by that? Let's say we get a break above, because it happens. Eventually you'll get a break. And now the market is up here doing the same thing, right? What was once your resistance over here, remember I said your resistance is like your ceiling, is now your new support. And now you have a new ceiling, which is now your new resistance. So think about it like a building. Like I said, you start off on the first floor, you have your floor, you have your ceiling. If you go up to the next floor, your old ceiling is now below you, becoming your support, and you have a new roof, a new ceiling, which has a new resistance, right? And they'll do the same if he went the opposite direction, if he were to go down, right? If he went down, you have an instance like this where you have a new resistance now, and a new support, right? So your support and resistance is always going to end up breaking, right? And your old support can then become your new resistance. Your old resistance can become your new support. And you're going to be looking for these areas potentially for the market to break through, retest, and all that, which I'll get into in other videos. But it still leads to that concept of where higher lows, lower highs, all those things will tie into this, right? Like I said, we're going to go over that in other videos, but definitely wants you to understand, what's the uptrend, what's the downtrend, what's consolidation, right? Uptrends, you're getting higher highs and higher lows. Downtrends, you're getting lower highs, lower lows. Consolidation, you're kind of just moving in a sideways direction. You're not trading in consolidation. Uptrends, we're looking for buys. Downtrends, we're looking for sales. So that's it for this video. I'm going to continue to go into more things to improve your trading, but this is just some of the basic stuff that you need to understand to get into more detailed things when it comes to trading.